Deep Dive with David Stendahl, where we trade without ego, no emotion, no greed, and no opinion. Before we begin tonight's video blog, please read over our trading disclaimer and remember to trade smart and accept the reality that trading futures is risky. This presentation does not provide buy-sell recommendations, and our information is strictly provided for educational purposes only. As always, trade at your own risk and analysis. Hey, it's David Stendahl with tonight's Deep Dive. It is May 28th, 2019, and I'm going to take a look at corn tonight, the ETF being CORN. Now, we've had nice pop to corn as of late based on issues with tariffs and with the plantings and things of that nature. But what we're looking at is kind of a mixed bag here with the trend. The pop that we've been having is slowly turning the long-term trend. With the short and the intermediate, they're certainly pointing to the upside. So we basically have a mixed trend, but we'll see how things kind of play out here with the longer-term trend. It is beginning to turn here, so I'm sure that very shortly we'll have that point in the right direction. We have technical rating, which is positive because it's been popping to the upside, and the seasonals are still pointing to the upside. Now we're going to take a look at the seasonals in a little bit of depth along with the long-term trend, just to give you an idea as to what's really taking place here. When we look at some of the weekly patterns specific to corn, just as of late, you can see that there's a lot of information on here, just a lot of signals that have been popping up as of late on the high side and the low side, but a lot of lows that are actually out here. So corn 4 weeks ago, because this is a weekly chart, so 4 weeks ago we had a low, and then we had low last week and the week and another one. Both of these are reversal type signals. So there's a bias to the upside, obviously. So, well, let's just take a look at the market and you'll get a sense as to what's been happening. Here's this thrust that we've been having. You can see that there was a downward trend without any doubt, and now we have this pop that's been going on as of late. Now what was interesting is that last week, you can see right here on this one bar right here, it was up against a fair amount of resistance, and in short order, like a warm knife through butter, it broke right through all of these different levels right through here. So what's kind of interesting is that this threshold over here and this threshold over here, one's a support, one technically is a resistance, but it just depends upon where your closing price is. And the closing price at 420 and 6/8, so 420 and 3/4, it is above this threshold here and this threshold right over here. And so that means that that is going to act as support. So the critical levels are going to be, in this case, 418.5. And this one over here is 420 and an eighth. So those are the levels that we'll look at. In fact, you want to stay above those levels without it falling back below. In fact, what I'll do is I'll show you the targets since we're on this topic. Here's today's close, the 420 and 3/4. You can see that what we've done here on this particular chart is we take a number of different time frames and we look at support and resistance levels, come up with a special weighted average, and then be able to say, here's a target for the market. So in this particular case, we have a strength, the S, you can see down here, strength, represents 116. That's pretty high. The C represents count. We've got 4 separate instances of support and resistance coming together at that particular threshold, and then we have a weighting and a number that corresponds to those 4 separate instances of 116. So that's pretty strong. So what we want to do is we want to stay above, I'll just round it here a little bit to 419, and as long as we can stay above that, then we should be good, and we should see the market potentially start to look at this resistance gap between 422 and 430. So there's not a lot going on through there. So if we're able to break above and start getting into this territory, then there's not really a lot that's going to prevent it. So we'll see how things kind of play out from that side. And what I was mentioning before, with the price action we had today, it was able to break through this particular threshold because there wasn't really too much holding it, and so it was nice to stay above this threshold. And so I'm looking at a number of numbers, but using this average, if you will, it's 419, so that's a good number to be looking at. Now The positive, if we just come back here to the chart, as long as we can stay above this threshold, then everything is cool. But what we're also looking at is that the market is very much overbought. You can see from this thrust that we've had here that there's a lot of energy that has been spent getting up to that level. And now we're just barely above that threshold. So we want to see it stay above there, but there is a potential for a bit of a reversal under normal conditions. And so if we look at normal conditions, we'll take a look at the seasonals. Here's corn on the top 10, so it's right there in the middle, but at least it's on the top 10. And if we take a look at corn itself, the blue line represents, in this case, a 10-year average, and the black line represents the here and now. And so you can see as of late, this thrust that we had predicted here with the seasonal tendencies has been underway, and it's been doing a really, really good job. The problem is that we're at a kind of a peak right here where the market typically peaks out and starts to drop off. If we look at the 5-year, you can see we're near a top, and then we see a bit of a sell-off. The 15-year, it kind of sideways consolidation, but we're close to a top before the normal sell-off that we would normally see. So this thrust that we've seen, in part because of tariffs and because of poor conditions in well, across the country for the most part, with all of the flooding that we've been seeing, we'll see how things kind of play out here with corn supply and demand could actually push this a little bit higher. So we'll see as to whether or not the normal tendencies kick into gear. Right now, they are following the normal tendencies, but when we come to the 10 years, we'll see as whether or not this really does top out, or if there's more follow through to the upside, and then invalidating some of the seasonal tendencies that are going to be taking place this year. Now, longer term, the good thing is if we look at our depth gauge, you can see that there is a bit of a bottoming that is occurring here in corn in itself. Now, it's in a neutral state right now, but even with a little bit of reversal sideways condition, just not a huge sell-off, just a sideways consolidation with maybe a small little retracement, this is going to bottom out, and that the strength to the trends are really going to start to pick up here. So we'll have to see as to whether or not the normal seasonal tendencies really take hold, or if we actually get a legitimate reversal here to the upside. Either way, at least right now for the systems, here's sort of a snapshot of net positions. We've got a nice healthy profit in corn. We got a nice healthy profit here in soybeans, and wheat's got at least a profitable condition. This bar chart is simply showing how many net positions are we long. So in this case, we're long 2 positions in corn. We've got same thing with soybeans. We've got 3 open systems, if you will, net long wheat itself. So we've been able to take full advantage of this pop to the market. But again, we need to stay above that threshold that I gave to you, and we need to see as whether or not there's going to be some follow through with some of the trends that are obviously beginning to turn for corn. And if we're able to get this particular move to stabilize, build out a bit of a base, we could be looking at 430 as the next target once we get into this resistance gap right through there. But I think that for the most part, the systems are a little bit winded, given the movement that we've seen as of late. And we certainly have a lot of our conditions, both on the daily bars. You can see that our elastic level is severely overbought. And if we take a look at a weekly chart, pull this up here, you can see also that our weeklies are also very much overbought. But we'll see as whether or not there's a continued follow through here. Bottom line is, watch the systems. The systems during the course of the day will at least give us an indication as to whether or not we see the reasonable conditions where we want to start to unwind some of those long positions, or if we're just going to simply stick with it. But the good news for the longs, again, is having stayed above that particular threshold, that support level that I was talking about, where you can link this level and this level over here straight across. You can see that we're at that level, technically above it, but because it's winded, who knows if it's really going to hold here. But if we are able to do that, then we see a little more upside to corn. But just simply watch the systems a little more closely now, solely because of the fact that we've had such a big move as of late, and on a short-term trading conditions, things can reverse here fairly quickly. So look for profit taking if for some reason it's not able to stay above this threshold, and by all means watch the systems and watch the deep dive analytics that we update both in the evening, so after the market closes, 4:15, 4:30 that time, as well as the early morning around 9 to 9:30 in the morning Eastern Standard Time. So continue to watch those particular conditions as well. So with that, we will take a look at another market tomorrow. Thanks very much. Bye bye.